Welcome back. The traders are now answering your questions. First question for John Najarian from Anita in Pittsburgh. I've trimmed about 20% of Twilio, she says. Should I sell the remainder or hold? This has been a big winner, John. What do you do?
It has been a huge winner, and I think Wells Fargo just moved the price target up yesterday to 250, Sarah. So I wouldn't mind holding on to it, but she's got such a big winner here. I think maybe you just take the rest, either that or aggressively write calls.
Next up, Stephanie, Dan in Connecticut, has a question on Target. Should I buy, hold, or sell? Just looking at Target, it's down about 5% for the year, which is a lot better than many of the other retailers. Should have benefited from being essential and being able to be open. What do you do with the stock?
Yeah, I still like it. I still would own it, and I think you can actually buy it. They've been hurt by mix because they have more apparel in their stores than consumables, right? And then at the same time, they're aggressively spending on digital to improve their assortment as well. And I think all of these initiatives are going to lead to better market share for the company. It trades at a discount to Costco. Pretty much everything trades at a discount to Costco, but a discount to Costco and a discount to Walmart, and you get a nice yield while you wait for the recovery. I think the management is doing a super job.
But do you like it better than Costco? Because I know Costco is one of your faves.
That's a really hard question to answer, though, because Costco is like a bellwether. You know, it is a compounder, as we call it. And the problem is, and it's got a great moat, right? I mean, with their recurring revenue membership fees and that sort of thing. But it's trading at 35 times forward estimates. And this is trading at a lot less. Target's trading at a lot less, about 21 times. It's not cheap, but it's a lot cheaper. So I think you can own both. I really do.
Bob in Florida wants a general opinion on KKR. Courtney, you own it. It's also had a monster run over the last few months.
Yeah, I think it actually just hit a 52-week high on Wednesday. So if you're basing it on what the market thinks about KKR, I think they think it's a pretty darn great company, and I do too. I also like the industry. So what I've talked about for a while now, and I own KKR, I own Blackstone, I love alternative asset managers. The way that institutional assets are flowing, it is into passive funds, rightly or wrongly, and also balancing that with trying to garner, returns out of alternative portfolios. And KKR and Blackstone are two of some of the most pristine firms on the street right now. And I think that when you look at the leadership team, the management team, how they're able to execute, they do a phenomenal job. So KKR is a company that I will own, and I'll own for a while. I was able to get in at some of the lows in March, and I'd owned it prior to that. And so I've continued to really hold those names as my exposures to financials continue to grow as well.
Up more than 45% in just 3 months. Jenny, Steve has a question. Wow. Steve in New York asks, my grandson just graduated from high school, and I'd like to buy stock for him. Any recommendations? Good question.
I sure do. And don't hate me because I'm boring on this one. I think you have a wonderful opportunity to teach your grandson really great investing habits. So my recommendation for you would be AT&T. With the 7% dividend that it has right now, you will be able to teach him about the value of patience, the value of compounding, the value of cash flow. You can teach him about the rule of 72, where a 7% dividend return will help him double his money over the next 10 years just by being patient and sticking with it. So AT&T is a great teaching stock.